Hi, welcome to the Market Alert for Wednesday the 1st of June 2016. So yesterday the market in a sideways move in the pre-market session, very quiet, as you'll see from the daily chart in just a moment. The market then kicked off. We had the first signal, sell signal, and the market driving through the scalp line there and then continuing to move lower all the way down until we got the reversal signal there with a buy, which stopped out the trade on the downside there. Let me just explain why. I'm just going to remove that for a moment. As I said before, the market drives through the scalp or the psychological lines. Then what you can do is take a 50% extension and then just keep moving this above the lower highs, and you can see this one actually coincides with the buy signal that we saw appear on the chart there. So I'll just draw that one back in now. You can see you'll get the same place. So this one stopped out and a buy signal there, this one resulting in a 20-point loss, but the sell signal, I'll just draw it back in so you can see what was made on this one as well. And if you go to tools and pip measurement, you can see, just to get a quick rough idea there, a 56-point move on this one. Of course, you've got to give up a bit for the slippage and the spread as well. So the market then trying to move higher fails to do so, trade sideways, and then in the evening session you see the market move once more, and again see how prices drive through the psychological level and the scalp level. And again, this is the trigger to initiate a trailing stop, and you can see we've got these lower highs here again. See the market stopping the trade out there as prices reverse before the end of the session. You can see down to there again, the ballpark figure is 41 points. So not too bad a day. The actual volatility starting to increase, and we'll look at that in more detail in just a moment. But in the daily chart, you can see we've had three very quiet days. I'll just bring this over a bit, make it a bit larger so you can see. So yesterday the market's back in action, even though we're still waiting for Yellen's decision on interest rates this month. 14 days to go. We're in the countdown now to see whether the Fed are going to be daft enough and stupid enough to continue to increase interest rates to normalize rates. So the market certainly showing some sort of weakness here as well. News-wise today, nothing, only the ISM manufacturing. This is out at 3 p.m. There's no crude oil inventories today because of the Memorial Day holiday on Monday. That will be released tomorrow at 3:30. So we've got just this one piece of news today, waiting for the ISM manufacturing figures, and they're forecast to be more or less the same, so it'll be interesting to see how they come out. Right, let's have a look at the implied volatility before concluding. And the implied volatility, the chart is back, and I discovered that it was nothing to do with volatility, but to do with the Mozilla Firefox browser. For some unknown reason, it just wouldn't render the chart and show it. So the good news is we're back with the implied volatility chart. We had a low for Monday of 10.54. Not quite beating the 10.45 low for January of July of last year, but heading in that sort of direction. You can see this is kicked up a bit yesterday as well as the market moved lower, but this is a very interesting picture here. We are on the cusp of a major move to the downside. Now, whether that comes just after Yellen's made the decision and she does increase interest rates, then we're going to see what we saw in December, and following that 2,000 point drop in the Dow as well. So hang in there. It's fairly quiet at the moment. The range isn't too brilliant, but that's because of the mitigating circumstances of whether the Fed are going to increase interest rates or not. So we'll just have to wait and see and sit it out, as they say. Right, that's it for today. I will see you in tomorrow's, unless there's something to report in between. Other than that, have a great day. Also, thank you for your support, also for watching. See you in the next one.